In this video, I'll be sharing with you how I made 8% return in just 7 weeks trading Coinbase, which is one of the most volatile stocks in the market. So this is the last episode of my rolling options course of where I teach people how to roll options down and out for a profit. So what I've got on my screen now is I've got Coinbase's chart. And what we have is I've got two lines here. And these first two lines is where I placed my first, which we'll go through in a second, back in August the 23rd. And I have been rolling this position ever since. And I finally managed to exit this position on Friday, the 7th of October. So in total, 7 weeks where I netted $601 on the initial $7,500 that I put up as collateral. So as a percentage, that works out as 8%, which again works out as over 1% a week across the 7 week period on average, which again is absolutely fantastic. And this is the skill that I mentioned when we first started doing this segment of the concept of rolling, where unlike where you're buying options, where you buy a call, for example, or buy a put where you think a stock's going to go up or going to go down, is at the date of expiration, you will end up losing money if the stock did not go high enough or low enough, depending on what you're trading before that date. Whereas when you sell options and when things go against you, you have the ability to buy that option back and sell to open a brand new option for and pick up premium for more than what you bought the old option back for a net credit. And as you can see, that's what I've been doing here for these 7 trades. So if we look at the first trade as an example, I sold the ITM, which stands for in the money. And what in the money is that I selected a strike price that was greater than the current price. So I wanted to challenge myself and to document and show you guys that you can uh, you can really use this strategy whether you want to go in the money or out the money. Traditionally, you would sell an out the money put, so price can still drop a little bit and you can still be above the strike. But as you can see here, when I purchased it around 75 mark, which is what about there-ish, you can see that Coinbase was only going in one direction, down. However, during that time, I was able to roll down. So I bought back the 75 strike and I sold to open a new strike, in this case 73, and at a later expiration date, in this case September the 2nd, and I received a net credit. So I was being paid to take $200 of risk off the table. So 75 minus 73 is $2 times by 100 shares, which is $200. I got $200 back in capital and I got paid $50 to do that, which is absolutely fantastic. And this process continues all the way down here. And I think the last episode ends at around trade 4, I think, where I had it at $70. And then I was able to roll down my strike all the way down to 76 because it was during this period here, especially when Coinbase started to gap up. I wanted to be safe and decided to drop it down all the way to $66. And as you can see here on the low on this bar, Coinbase got to a low of 59.48. That didn't really help me there. But again, I'm still picking up net credits. Even though it was $7, I managed to take $600 of risk off the table pretty much at break even. Perfect trade. And then I decided to roll down from 66 to 65. And again, receiving a $45 net credit. And then last week, October 7th, I just decided to buy this option back and pay a $6 debit. And obviously I didn't sell to open a new one as well, which gave my total net credit of $601. What I have on the screen now is the screenshot of all of these trades. So all of these trades here, I'm leaving this on the screen so you guys can pause the video and have a look. It's got all the dates and timestamps, so you can go back and check it on the chart. But you can see we started at the 75, rolling to the 73, to the 71, the 70, the 66, and finally the 65, which I bought back for $6. So this proceeds is the amount of money that I made. So you can see, so the way it works is it groups together your sell order and your buy order for that option. So obviously some of these are at a loss, but you can see I made some big gains as well. So the way they net out, so you can understand how this works, is I bought back the 75 per for $540. And if you look at the timestamp, it's on August the 25th. And then I sold to open at the same time for $590, which there you get your, what's that, $50 net credit, which is what you see on TradingView there. So that's how this thing works. So if you add up all the bold pluses and minuses, it adds up to the $601 there. So again, have a look at this. If you guys, again, brand new, want to understand how this works, you've got the full details here. So you can go and check out all the trades for yourself so you can see what happens. But again, the reason why I'm sharing this with you guys is for you to know that when you sell an option, you don't have to accept assignment. And I was very clear when I was doing this series that I didn't want to own Coinbase at 75 or 65, etc. So it's currently trading pre-markets at 69. I was a bit lucky that Coinbase has ranged, but it's making lower lows and lower highs. So it is trending downwards, which again, selling options, especially selling put options, is a bullish strategy. So you kind of want price to be going up. So it was these lows that made me do more trades than I needed to. And it was this massive move here that allowed me to roll down from 70 to 66. And then it fluttered its way out here. And eventually I was able to get out of this option quite comfortably. I could have continued rolling it, making more money. And that's what I do when I trade stocks that I actually want to trade and actually don't mind owning, is I would just continue roll every single week, keep banging in the dollars coming through the door. And you're picking up sometimes breadcrumbs like $7 and sometimes some nice meaty chunky premiums of $4.30. So that's what I've really got to say on this. So again, when you're looking at an option and when you're selling put options and you get into trouble, you want to roll down in strike, out in expiration, hopefully for a net credit. And again, I was lucky in this challenge that I didn't need to take any net debits like I did here when I finally closed the option to roll my strike down. So if, for example, I was at this one at $73 and I rolled down to 71 and rolled out to September the 16th, and let's say it costed me $10 to do that, it's still the right move because you're reducing your strike by $2. So you're saving $200 in collateral for only spending $20 or whatever it may be. So therefore, it's still the right move to do to take risk off the table. And I always talk about it, and I talked about it in the last video. If price is going down, and let's say your strike is here, you want to keep rolling down that strike, and then eventually, what happens is that you get this inflection point over here, and that's when you'll be able to get out of this option or buy it back for not a lot of money. And that's the element of where. On what we're trying to do as traders is manage the position. And again, I've done this for years now, so I'm quite comfortable with this. But even if you're new, just look at one position and you can start on a demo account with Interactive Brokers. Again, the link is down below if you want to do that. So you can start practicing this before you move on and graduate into trading for real money. And again, you can do this with any stock that is an optionable stock. So I really hope you've enjoyed this video. I've got other videos on here about options trading, all about selling options. So I suggest you check that one out, and I shall see you guys in the next video.